If Circle's strategy is trust through transparency, then Tether's approach, founded in 2014 as Real Coin, can be characterized as move fast and maximize profit. They prioritize market dominance and profitability, often at the expense of transparency, the black box reserve. Unlike Circle's clean reserves, the structure of Tether's reserves is far more complex and opaque. Let's look inside their attestation report. Cash and cash equivalents. This is the largest portion of the reserves, but the most interesting parts lie elsewhere. Secured loans, approximately 8.2 billion. This is a huge and the most controversial strategy. Essentially, Tether acts as a large, unregulated crypto bank, issuing loans to other companies against liquid assets as a collateral. Who these borrowers are and the quality of the collateral is unknown. An example of these risks is their past loan to the now bankrupt company Celsius. Bitcoin, approximately 7.9 billion. Tether holds billions of dollars worth of Bitcoin on its balance sheet, purchased with a portion of its profits. This adds significant volatility to their asset base. Precious metals, approximately 5.3 billion, mostly gold. Other investments, approximately $4 billion, a completely opaque category that could hide anything. A history of controversy lies in the attestation game. A key moment in Tether's history was 2021 settlement with the New York Attorney General office. The office conducted an investigation and came to a conclusion that, in its own words stated, Tether's claims that its virtual currency was fully backed by US dollars at all times was a lie. Here are the main findings of the investigation. There were periods when Tether had no access to banking services at all, meaning it had no reserves to back the tokens. They covered up a loss of 850 million by secretly taking money from Tether's reserves to patch a hole in the balance sheet of its sister company, the exchange Bitfinex. In the end, Tether paid an 18.5 million fine without admitting guilt, but it was ordered to begin publishing quarterly reports on the composition of its reserves. And here we come to the attestation game. It's crucial to understand the difference between an attestation and a full audit. An attestation, which the firm BDO Italia conducts to Tether, is merely a snapshot of assets and liabilities on a specific date. An audit is a much deeper and more comprehensive review. Critics argue that Tether uses attestation to create an illusion of transparency, especially after the New York office found that they had specially moved funds into accounts right before a check to show the required backing.